Oh, hello, everybody. Welcome. Happy 4th of July. So I hope you're having a fantastic weekend and a super safe weekend. I'm going to be turning my phone on Do Not Disturb. So last week, I had a guest on from Colorado. And after the live stream was published, the comment section was brutal. I'm not going to lie. It was brutal. And mostly it was I'll even show you some of the comments because I felt like the best way to answer those comments was not necessarily to answer them in the chat itself. The reason being is sometimes words get misconstrued when you type them out. The intent and feeling behind those words do as well. And I didn't want anybody to think I was being snarky McSnarkikins when I'm answering them, because when I would read them back, I'm like, this could be taken the wrong way. So I'm answering some of those comments. Some of them are not really some of them are kind of hateful. Obviously the way that they wrote them was not in the intent of being necessarily positive, which is fine. That's what you get for being on the internet. But I'm not going to say that some of them didn't hurt my feelings. I'm not gonna whatever. It is what it is. But the other thing we're going to be talking about today is individual investors and institutional investors. So there is a difference between the two. You have the individual investors that's buying a couple of houses to build their equity and incomes or portfolios over lifetime for when they retire. Then you have the institutional investors that are buying out like whole sections of neighborhoods, towns, they're even doing this build to rent thing. There was a comment that was made in a podcast that I listened to that I found pretty interesting coming from a real estate agent, because it's not the way I felt. So I'm going to show that video in just a second. But I also have a guest that popped in at the last minute, which I'm really relieved about, because I just watched this video about rental costs and how it's affecting people that are trying to buy a home. So let's have everybody welcome Trevor Smith. Hello, Trevor.
Hey.
Happy 4th of July.
Yeah,
and
same
I
to
want to
you.
thank
Glad to
you
be here.
for you were in the military, correct?
That's right.
Yep. Thank you for your service. I appreciate you, and happy Independence Day to you.
Yeah, it's a great day.
Yeah.
Even if there are some negative comments out there.
Yeah, I know. I get some brutal ones, man. Like I always find the ones about my appearance to be the funniest. And if anybody must know, I mean, totally real estate off topic. If anybody must know that the ones that you guys say about my appearance, I find so hysterical that I screenshot them and I put them on my personal Facebook page for other people to ridicule those comments, because they're so stupid. Some are so dumb, and they're like, "You look like an old lady." I'm like, "I'm 50. Like I've lived half my life. I'm not exactly young. I'm good. I'm still alive." Somebody likes my hair color. This was a mistake. This wasn't the intent of the color, but whatever. It is what it is. Got to watch.
It looks good.
It is. Yeah. Thanks. Wasn't what I intended, but whatever you're gonna do. It's temporary. It's all temporary. So Trevor, I want you to watch this too, because you probably didn't see this, but I was listening to a podcast called The Bearded Men of Real Estate. Ray Allen and his friend from California, his name's slipping my mind at the moment, but they started talking about institutional investors, and his perspective was so different than anything I had ever heard in real estate. And Eddie is going to go ahead and pull that video up. I'm going to mute myself while that's going. Go ahead.
What they're trying to say is the reason why you, Mr. Consumer, in the lower 1/3 of the market can't buy a home, it's because the hedge funds,
Zillow bought it,
and Zillow are buying them all. That's what they're trying to say. And that works if you have an attitude of scarcity or a belief that there's only a limited amount of possible homes. But if you believe that an increase in players in a marketplace work with economies of scale and could eventually lower not only the cost, but also lower how much those people will pay for these homes in the future, then this is not a big deal. So, and that's kind of where I am, because whenever you have a ton of people entering a certain marketplace, what happens, right? Like, let's pretend that real estate news was suddenly a huge.
Okay. So here's the thing. Oh, that was a terrible screen grab. Here's the thing. So what he's saying is that because, if you have the mindset that there isn't enough houses on the market and that these investors are buying up them all, that's just not the case. There's plenty of houses out there, but we have a lack of supply of homes. When we've had a lack of supply of homes, in some estimates, it goes from 1 million all the way to 5 million. I've even saw one that was 7 million. That was prior to the pandemic. So I don't know where we made up 2 million houses in the meantime, but like, how does that, to me, I mean, we have a mindset of scarcity because we do not have enough homes on the market. And it is institutional investors that have driven up not only home costs in some areas because they've overbid for single family homes, which would be your first time home buyers, but you also have driven up rents, like in some areas 35%, which you had addressed in your last video. So do you believe, and I even have a poll in there if you guys haven't answered it yet in the chat, make sure that you answer that poll. Do you believe that institutional investors are causing a problem in housing prices in some areas of the United States? Uh-oh. I think you're muted.
How's that?
Yeah, that's better.
Sorry about that. No, for sure. I mean, especially in certain markets, I think, if you look at Atlanta's a big one, Phoenix, some of these other places where we're seeing investors purchasing upwards of 50% of the properties within specific zip codes. And I did a live stream and talked about this, and it was interesting because, I'm in the Charlotte market. And there was an article that was published and it had a link to a graphic that was sourced from county records here. And it showed you, pinpoints on the map of every single property that was owned by, investors. Now, investors, could be someone, out there that owns one property and decided to form an LLC. And so that's what, they're classifying it as an investor. But obviously, like when you see the names of like the top 10 that have like, anywhere from 50 to 1,000 properties, that's not some mom and pop down the street buying, a couple houses. So, and that's certainly having a significant impact on the market, specifically in the lower price range.
Right. And he says you come from a mindset of scarcity. And I was like, well, if you think about it, we do not have enough homes built. And now the institutional investors have gotten to the home builders and they say, don't build them for the customer, build them for us, build them for the build to rent. So some of the areas people are like, oh, look, new houses are going up. They're really excited because they look like they would be the type of homes in the price range they're at. And then they pull in there and they're like, these are built to rent. They're building them to rent them out. The home builders have already been approached before they even like scraped the surface. They're like, these companies and these big investors come in and say, you can build all your homes all the way through any way you want to. And we'll buy every single one in the stock because there's no regulations in the cities or the areas that stops this from happening. Mm-hmm. And I've only seen it in a few places in Texas, just a few, but it's really prevalent in around Phoenix, Arizona, and they've had a little bit of a market shift. So I don't know. I mean, to me, institutional investors are a huge problem, and it's not going to get any better. The more the inflation goes up, the more institutional investors are going to invest in real estate. They've always done this, always. And it concerns me greatly. So Eddie, if you could pull up that chart that if you go into the chat, there was a poll that I did, and he's going to pull it up and put it on the screen. And I was asking you guys in the chat if you believe that institutional investors are a problem. Now, it looks like that more, politicians right now are campaigning on this platform to stop, institutional investors coming in. But it can't be a statewide thing. It'd have to be a city thing. Like, you can't just say statewide, investors can't buy blah, blah, blah areas. You can't do that. I mean, that's my opinion. It would have to be like a city ordinance or a town. Well, how do you think that politicians should be campaigning on this if this is something they want to do?
I don't know. I think there needs to be some potential partnerships with the institutional investors, with builders for affordable lower income kind of multifamily,
like
dwellings.
condos,
Yeah,
like
things like
condos
that.
and townhomes instead of single family dwellings.
Yeah, but I mean, like, I think there should be some incentivization, something that incentivizes, the investors to, work with the individuals in those properties to convert them from a renter to a buyer, after a certain amount of time, and like they can't do that with everybody, but, maybe some educational programs that are tied to that, some financial planning programs that are tied to that, and different things to help incentivize those people to not be long-term tenants. Now, if they end up being long-term tenants, that's, some people will just do that because, there's always going to be people out there that make poor financial decisions. But I think there needs to be something else that, is a combination of the investors, and the politicians kind of trying to solve this together.
Well, I mean, if they want to make lower income housing, and I've always said this, there's government land that's being not used. It's purchased by the government. It's just sitting there vacant, and some of it's just empty, vacant lots. It's not like, green space that people can use. It's just sitting there. And there's government buildings that are sitting there vacant. It's everywhere. They could sell that to builders to build apartment complexes, townhomes, that kind of thing. I mean, they've done it in the past and they could do it again.
Yeah, you've got, you've talked about this a lot, Kristina, but the NIMBY crowd, people don't want that in their backyard though. I think there are certain areas that there's opportunities for that. But then when all of a sudden local residents start hearing about that, it gets immediately shot down.
Long story short says, when it boils down to it, that there is zero downside risk for Blackstone because of if it market falls, they get bailed out. And I've said this before. So in the last housing crash, I don't know if people know this, but Blackstone and a lot of those companies were sold back those houses that they bought with crappy loans to begin with. And then they just bought them as a bucket of crappy loans. And they're like, oh, we got these properties. And some of them gave them to like Tricon and Invitation Homes and everything. And Blackstone worked with Invitation Homes to say, we got these terrible houses that have been foreclosed on. What are we going to do? And they're like, okay, let's turn them into rentals. So they kind of like put the lipstick on the pig and they put renters in there. And they were like, hey, this is a cash cow, man. Like that was a great investment. We're going to keep doing that, So if everything goes to crap again, if it all like falls apart again, these are the people that will be picking up the houses that are foreclosed on. In a way, we would be in worse shape if these companies didn't pick up all those foreclosed homes because there were so many crappy loans at that time. It's like a double-edged sword. It's like a double-edged sword. So, Eddie, can you pull up that poll? Eddie, you want to sit here real quick while I pull up that poll? Eddie can't pull up the poll. It's at the top of the screen. Okay, open up a second window. Okay, and then expand the window out just where the he can't do it. Anyways, I'll pull it up on my phone just to find out what the numbers are. Poor Eddie. He does such a good job on this. And somebody said, oh my gosh, somebody in my comment section last week actually said that I'm mean to my husband. And I'm like, Eddie, am I mean to you? He's like, no. I'm like, well, this lady says I wish that I would treat your husband better. I'm like, holy cow. I didn't know it was that bad. All right, here we go. Let me see if I can find the poll. Did the poll not happen?
But while you're looking that up, Kristina, I saw a comment I wanted to address because somebody said they heard me say that people that are poor, I guess people make bad decisions to be long-term tenants. Look, I come from a very poor family. Okay. I know what it's like to live in that kind of desperate housing situation needs, where you're not sure where you're going to stay, where you're getting kicked out of a house, as the oldest of 4 kids, with a single mom. And trust me, like I watched my mom make some very bad financial decisions. And so, I know what that's like. And my take on this is like, I'm very empathetic, right? And I want to try to find solutions that help people that want to own a home to not make bad decisions. But sometimes just human nature, people sometimes just don't want to be helped, and it's tough in those situations. And certainly that is not a large percentage of the people. A large percentage of people want a better place. They want a better future, not just for them, but for their family, for their children, so don't please hope my previous comment wasn't taken the wrong way, but I am all for trying to find a way to provide better housing solutions and better long-term financial solutions for people.
I think sometimes though, when it comes to people and renting and the mindset of renting, and you like, where they say they don't want to be helped, it's because they've never been told there's another way, right? They feel like they're so in it now, like too much time has passed, and now there'll never ever be in any other way except for renting. And then they've gotten confirmation bias because they're like, well, look what happened in 2007. If I had bought then, I would have lost a ton of money. And
I think to the clip that we watched earlier, that's kind of where some of that scarcity mindset comes in, because you get into a situation at some point and you feel like there's no way out, right? And there's just not going to ever be an opportunity to advance from that.
Eddie just pulled up the poll numbers because for some reason I can't see it on my phone. Yeah, there it says, do you believe in it? Okay, so 86% say yes. 7% say no, and then 6% say not in my area. The poll was complete with 187 things. Thank you, Lawnmower. Thank you, Jeremy Knight. I don't know why I can't see it on my phone. Like, I don't know what's going on. It's craziness. But there's people out there who are taking care of me. The thing about the whole renting debacle at this point is that rent prices have gone up so incredibly high. And the reason why I'm talking about institutional investors and renting is because they have manipulated the market in some areas to the point of 30, like record highs, 30 to 35%. You in your last video mentioned Austin, Texas. There's other areas as well. There's people that are getting notices and it's $1,000 more. For the first time in history, the median price for rent is $2,000. That is insanity. And you had broke down all the numbers from if you compared it from 1980, what was it, 86 or 87, something like that?
Yeah, I can't remember. It's crazy. And the Charlotte market is obviously no exception as well. I think we're seeing a lot of those leases, obviously resetting during the summer period, right, which is typical. And we're seeing upwards of 30%, price jumps on those lease renewals. So,
and then they're in this catch-22, like you said, because now the rent has gone up this much, so they have less money to save. The interest rates have continued to go up, and home prices haven't come down. And even if they were to come down with the interest rates going up, they're not paying less; they're paying more. And so they'll feel like they're never going to be able to afford the home. And this is a weird time because the last housing numbers that came out, even though there was price reductions, they're still closing at they're still increasing in price, not by much. It isn't 14% or anything, but just they're still scooching up. What was the median price? 407,000. Is that
we were somewhere around there?
Yeah. Did you say Austin? Yeah, Jeremy's in Austin. Yes, Jeremy, we were talking about you in your market. James C says lots of YouTubers are saying crash for the past 2 years, and I said crash is always right around the corner. Well, at some point somebody's going to be right? So and I will stick by this, and in my next video this is what I'll stand by, is unless there's an economic collapse of the jobs market, we're not going to see numbers tanking 30, 40, 50% in equity. I mean, it would have to be a substantial financial disaster for homes to start just flipping over and being foreclosed on like that. That is my opinion, because every time every time I get into this is when people think I'm an idiot. But I'm not going to throw up 1,000 charts and to show you all this. I mean, this would take forever. But what do you say, Trevor? What do you
So I've seen some of these people, obviously, and the latest that I heard is now the story they're pitching is, well, a crash doesn't happen overnight. It could take up to 5 years before, you'll be at a good time to buy, and obviously, like they're right on one note is that a crash doesn't happen overnight. It's not like you're going to next month all of a sudden a 30% price reduction on all homes across America. That's not really how the housing market has ever worked. But yeah, I think the price reductions that we're seeing that you mentioned, sellers were overly optimistic because they're so used to being commanding such high prices for their homes. And so they're pricing their homes unreasonably high. So when you see that price reduction, it's bringing it back down to the norm, which would be more typical of, the 3 to 5%, growth in home prices. And I think we're just going to keep continuing to see that going forward.
Yeah. I have to tell you, I looked up some delinquency numbers, and like Louisiana and Mississippi has the highest amount of delinquency in foreclosures.
But it's still below the pre-pandemic levels. So,
way below.
I mean, because I keep seeing these alarming headlines that some people use, for the clickbait of, 700% increase in delinquencies. And it's like, sure. Like when you go from 100 to 200, you've doubled, right?
Right.
But when you're still well below historical averages, and, and we look at loans all the time, and you look at the number of people that are entering forbearance, exiting forbearance, that sort of thing, and that are late on their payments. And we're just not seeing any sort of significant increase in those. Everybody said, well, when the interest rates go up, that's when it's going to happen. Well, interest rates have been up really since February, and so normally the market kind of lags that. We're about, 4 months past that, and we're just not seeing significant changes in terms of delinquencies and late payments, things like that.
I will say though, the like the fever, like the real estate fever, you know what I'm talking about? Like there were so many people that were like just so gung ho to buy anything during those low interest rates. I mean, that fever was like they finally broke it, like they're like, all right, we're going to wait until we find the house that we want. They're still buying, but they're not doing it to the feverish like some areas are still seeing bidding wars and everything else. But I have a friend in New Jersey, and they're not seeing like the bidding wars like they did before, and they're definitely seeing price reductions. The woman I had on last week, it was like she said it was like overnight. It went from they had 1,500 houses for sale to 3,500 like overnight. So that the fever dream has broken, and I think that we are heading into a, what I call stagnant market, that we will see very minimal increases. And I think we're going to be seeing that for some period of time until there is a change in the financial market with jobs. If people start getting laid off more and more in other sectors other than mortgages, then we're going to have a problem. Because all the layoffs, people are like, there's all these layoffs. I'm like, of mortgages? That's because they're not doing refis. Who wants to refi at 6.5%? Like, of course, a lot of these I hate to tell you, Trevor's a mortgage guy, but a lot of these people were making bank just doing refis all day, every day. Some of them you couldn't get on the phone because they were so busy with their refi business. And now that their business is dried up, and so that's why a lot of them have lost their job.
Yeah, this is very typical of the mortgage industry to see this boom and bust, right? Because they want to make money while they can, and so you have a incredible increase in hiring. Going back a couple of years ago to handle all that refinancing demand. And then all of a sudden when it goes away, essentially overnight, I mean, if we look at, the percentage of refinance volume for mortgage originations between December of last year and February of this year, I mean, you're talking 60%, and now I think we're like 80% less than we were last year. Now there's no business, right? And so companies that didn't scale appropriately in anticipation of that, are now suffering, firing workers like Better.com did over Zoom calls. I think they fired 900 workers.
They sure did.
Over a Zoom call, And then now we've got I think it's First Guarantee Mortgage in Plano, Texas, is now filing for bankruptcy, because, and I, to be honest, like I tried to warn about some of this a while back in one of my videos, talking about that there were some shady lending practices going on because the refinancing demand was going away. And some of these non-bank lenders were pursuing more aggressive non-QM loans, basically things that don't meet Fannie and Freddie underwriting guidelines. And so higher risk essentially is what it boils down to. So think of like your interest only loans, your 40-year mortgages, things like that. Not as bad as we saw back in the last housing bubble.
Just ask that.
But there was yeah, it is not near as bad as last housing bubble. But like if your business is, if you're a small non-bank lender, when I say small, relatively small compared to the industry, and you start pushing a lot of those products to get involved in more risky loans, now you start having capital issues and other problems that impact your bottom line, as you're trying to desperately make up for the business that you've lost, and you're really taking a lot of risks. So it wouldn't surprise me to see a couple more of these go bankrupt here within the next couple months. But in terms of the overall impact to the mortgage market, it's normal.
Right. We're going to dial back to the institutional investor really quick. So when he mentioned the fact of scarcity and everything, and that, it's hard to believe that the investors are causing the problem, because how are they to say there's no real chart of people that would have been able to buy the house but couldn't because an individual investor or an institutional investor bought it? But I don't know how it works in your market, but I've seen in my market that the first time home buyer is trying to purchase this house, right? They're working their butts off, and the investor comes in and they're all cash. They don't have, they don't have any mortgage to go through. They don't have to go through that process. And not only that, they're bidding $20,000 over the asking price so they can secure the home. And this happened all through the pandemic. We had a scarcity of single family first time home buyers, not buyers, but the homes itself. And they're not building enough. There's no incentive for builders to build those types of homes anymore. So I as much as he said, well, it's, this is capitalism and this is how it's supposed to work. I'm like, yeah, but there isn't enough product to dictate the price. You would have to flood the market with these smaller homes in order for that to balance out. This isn't the same thing. So I wanted to put that out there. So, because it bothered me, because I was like, you're looking at it as if we have a lot of homes that are in that first time home buyers and that there's building a ton of them, and they're not. There's no incentive for a builder to do that. Do you agree with that? Or do you I don't care if you argue with me, but
no, there's not incentives. I mean, and they're making more money on more of the mid to high price homes, for the upper middle class, and in some cases the upper class. And at the end of the day, even if they do build stuff more or down on the lower end scale, the problem is, it starts off as a rental property, and eventually it's always going to be a rental property because they're just going to sell it to another institutional investor. It's not like they're going to hire a real estate agent to list 1,000 homes for sale for them all at the same time. They're going to sell them off in chunks,
Do you think that could possibly make home prices, let's just say Blackstone tomorrow said, you know what, we're sick of this real estate game, and they're just going to throw everything on the market at one time? Do you think that could help tank home prices?
I think that would cause a frenzy for sure. I don't think it's
it's not plausible. That was just
not plausible. But if it happens, I do think as investors look at where they can find opportunities to get a return on their money, right, in an inflationary environment, real estate typically tends to be one of the better places. So I think somebody's still going to step in to buy them,
Absolutely. I know that you were tight on time. You said that you had about 30 minutes, so I didn't want to keep you.
No, I can hang out a few more.
I wonder what happened to those HELOCs. A Diamond Rush Media wanted to know.
There's people that took out HELOCs or home equity line of credit is what that is for those of you who aren't aware. And it's and then there's also people that did cash out refinancing, right? So just refinanced their home, tapped into that equity and got some cash. But, when those loans are processed and conducted essentially, for the underwriting guidelines, especially for a cash out refinance, we're still scrutinizing that to the same degree we would, a purchase transaction or any other mortgage refinance transaction. Now, for a home equity line of credit, depending on the terms of them, it'll be interesting to see what happens. It's not going to have a negative impact on the market because, people are probably going to close those out as their interest rate is usually adjustable on those, tied to the market.
Mm-hmm.
But I don't think they were done in significant numbers to really have any sort of crazy impact on the market. This isn't like, 2006 where somebody buys one house and then they take out, $100,000 of a house that hasn't really even appreciated in value, but on paper they said it did, and they're using that money to go buy another house, right? That's where you start running into some of those problems.
And they were tight on giving HELOCs because I, at the beginning of the pandemic, said, if you guys are concerned, go ahead and run and get yourself a HELOC. And they were like, my bank's not doing them. Bank of America's not doing them. Wells Fargo stopped doing them. So they were like, we're not letting people do this.
Yeah, we don't do them. I don't know many people that do them.
Your local banks have your
yeah.
your federal credit unions, those kinds of things. Eddie, yep. I want you to pull up the first comment that came in from the video there. It's in the and I have other comments coming in, but I want to read this one because I want to address this one because this one, it kind of made me laugh, but it was kind of like, dude, really? It says, I get the banner off too. It says, if you are undereducated, overpaid, and still with a 5th grade level, you push high prices when there are on the decline and want HOAs to be the norm. What will happen to the U.S. with so much realtor influence, such an organization of willing to pay by creating multiple bidding? Okay, Susan, sweetie, it's okay. First of all, I want you to know something. It doesn't matter to me if you purchase a home or you don't. It's okay. Secondly of all, I do have a high school certificate and I did take some college, but I never graduated. Just FYI, we're just being honest here. Thirdly of all, the market itself dictates the prices. We do not force any buyer to bid for a house. We suggest how much we think the house will go for. We show them the comparables, and they, as buyers, make that decision. If they do not want to pay that, they walk away. If the house is overpriced, the buyers will say, I'm not buying that house. It's overpriced. I don't have that kind of funds. And home prices drop in value, just like we've seen in years past. Home prices declined. At some point, home prices will decline. But it's okay, Susan. I am a little bit above 5th grade, just a scotch.
You're doing okay.
It's okay. It's okay. Eddie, do you have any other questions you want to put up here real quick? Because there are some other comments I want to address. I can't. What's that?
Questions? Yeah.
Eddie's finding one. Eddie's finding a question. He got the chat will jump on him, so he'll have it, and then it will click up. So he has to find that question again to put back up on the screen. If he finds it, I can pull another comment if you want me to.
I'm just trying to do them in order.
He's sitting right here. Eddie's in the corner here. He won't let me show him though, but it's because I'm mean to him. He doesn't want me to show him because I'm so.
Well, I'll tell you, Kristina. So with that last comment, one thing that's interesting on the mortgage side of the business, right? Like there's such a prevalence of online access to mortgage applications and mortgage pre-approvals that you can just click in a few numbers and, you know, hit that button to get that instant pre-approval from whoever, right? The problem is, you know, some of those calculations, they're based at what a lender, the maximum amount that a lender could potentially pre-qualify you for, pre-approve you for, and without really without really having a conversation in terms of like, well, how much debt are you really taking on? You know, because that could be a really high debt to income ratio. And so it's not that people are being forced into some of those. It's just that sometimes that conversation never happens. Right. And then all of a sudden, and I've got a video coming out here soon where like I react to some of like the bad mortgage advice that I see on Reddit. And I see a lot of instances of people finding themselves in a situation where they've purchased, they were pre-approved for a home. They go under contract. Then all of a sudden they find out that the interest rate has gone up and now they can't afford the payment anymore. And they don't know what they're going to do. And it's all because, you know, of how those calculations are done. And because a lot of it's done online and there's just no communication, you know, and it puts people in a bad spot sometimes.
The lenders last time with the last housing collapse, they got themselves, a lot of them got themselves in trouble. Years ago, this is years and years ago, I used to cut hair, and this guy was one of those predatory lenders, and he lost everything. He went to prison for doing that kind of stuff. You know, bad advice, bad loans. Anyways, Diamond Rush Media says, question, what about home builders who took money on bills and are under redemption? Okay, so some home builders, and this came from the National Association of Home Builders, they actually pulled back on how many homes they said that they would be building by this time, by 14%. They saw the interest rates going up and they're like, why would we build it? We're not doing it. We're not going to build it. And there have been some more incentives. I've even seen it in my area where they've given some closing costs, but you have to use their title company and their mortgage company. You know, you're not really saving $5,000 in closing costs. You know,
Yeah.
that's a thing. But they weren't even offering that before. They weren't even offering that. If it was me, I would take the package where they say, well, we'll give you 5,000 or upgrades. Take the upgrades because you'll get something with the upgrades.
Don't do either.
Yeah. So it was funny. It says the coffee mugs is normal size. Kristina is tiny. It says, this is what somebody said this to me because I say it all the time. I like big mugs and I cannot lie. Somebody said that to me. I love it.
That's awesome.
Love it. I know. Yeah. But yeah, I think some home builders will get their comeuppance. But not nearly the right ones. Not enough of the right ones.
what we're starting to see here in Charlotte is you know, about 6 to 9 months ago, some of these home builders weren't really paying realtors commissions for bringing buyers to the properties, or they were paying them $1,000, right, on a $600,000 home. And now some of those same builders, like I see a lot of social media traffic on some of these real estate Facebook groups where, you know, agents are pointing out that these same builders are now coming back and saying, oh, we'll give you 4% now, you know, bring us a buyer. You know, so they're starting to offer some of those incentives back and starting to bring the agents back into the game because they didn't have to do it for the last 2 years.
But just here recently, I just saw another couple who was trying to buy a house in New Braunfels in Texas.
Yep.
And they had been waiting like 15 months and they got down to this last 7 days and the builder had stopped the process saying, we need more time. And they were living in an Airbnb. 7 days before closing, they were like, we're canceling your contract. And they put it up for sale for more than they were contracted for. And because the builder's contract that you were forced to sign in order to build with them it protected the buyer not. Like there wasn't one thing that protected that buyer. And they had no choice but to sign it or the guy wasn't going to build the house. Yeah. So I think that needs to be looked at more because that happens in our area too. We'll give them the state contract that protects both the buyer and the seller. The builder won't sign it. They send back their contract, was like 37 pages long. Mm-hmm. And all it does is protect them as a builder and allows them to pull out of the contract with no repercussions whatsoever. And even to the point where you can't even sue and you signed that. So, I mean, you at this point with the market the way it is and things are looking different in different areas, I would try to negotiate where you have an addendum where you are protected as a buyer. That wasn't going to happen within the last 2 years, and most likely they won't sign it, but at least the effort needs to be made. That's my opinion. You want to throw something else up there, Eddie? Okay, John Mackey says, question, living on retirement income, buying now isn't realistic. Should I look into income-based senior housing and hope things even out? What is your opinion there, my friend Trevor?
I guess I first, wonder what the current living situation is, right? If you're in a place that you already have a place that you're renting, right, that you can afford the housing, I'd probably just stay there. But if you're looking for a different option to potentially save some money, there might be some income-based senior housing options, depending on where you're at. But I'm not sure. What do you think? Some of those manufactured homes or ADUs and things like that. Kristina, what do you think about those as an option?
Right now, if it was me, if that was going to be my choice, I know that retirement communities can go up in price exponentially, and there's no regulation on that, on how much they can go up. The second thing is when it comes to ADUs or even manufactured homes, unless it was on the lot itself, like where I could pick it up and move it that specific day, I wouldn't buy one that I ordered, because just like with new construction, even though this was the price, let's just say $10,000 today, then by the time it's delivered, it might be $15,000 or $20,000 because the price of, lumber and everything that keeps changing, and they can increase the price exponentially. If it was me and I was on a fixed income, I would be looking for a smaller manufactured home in that somebody's trying to resell. We have them here. I don't know what your area is like, but we have them here, and they're nice. Matter of fact, I started noticing on TikTok, of all places, people were like, people want to make fun of what I live in. Let me show you my manufactured home. And she goes inside. These things, honestly stunning. And she's like, you can call me whatever you want. I love my house, and I pay $500 less than my friends renting a house down the road. So I was like, good on her. Yeah. I'm gonna stick that video in one of my videos because it was awesome. And I've seen several like that. The way that they make manufactured homes now is not what you remember as a kid. That's for sure. They really are nice. Price per square foot, they are they used to be $76 per square foot. And they still say that on the manufactured home website. It's not $76 per square foot. I think it's more like around $100 on average per square foot right now. But that could change too. It's just that material costs went up so high in the past year. Next question. How to ADUs? Someone said, do you say ADU? That is one of the smartest guys. If you guys are wanting to do ADUs in your backyard, follow him. He's my guy. I really like that guy. Super smart. He's on TikTok too. That's how I found him.
I'll have to check that out. Well, Kristina, I got to run.
Yeah.
But thanks. Appreciate you having me on. Glad I could help.
Trevor Smith right here. Wingman Mortgage. Right. Everybody. Yep. Happy 4th of July. And thank you again for your service. You were in the Air Force, correct?
That's right. 20 years.
My dad was also in the Air Force. He did not fly a plane though. He was
okay.
The weatherman.
We're all part of the mission.
Yep, he is. Yep. So thank you, Trevor.
All right. Thanks. We'll see you.
Bye. All right. We're going to go back to some comments that were made on my last video. Eddie's going to pull up the next one. And Eddie said we got a bank of questions. So I'll just get to the questions, and Eddie's going to pull up the questions. He's running the show. I'm not. He's my wingman. Jerry Prusa says, question, where are the espresso makers in the studios? They should be visible to encourage espresso. I don't drink coffee. I drink tea. And it's really, I put milk in my tea, and I don't want to put a refrigerator in here. And it's just kind of like one of those things. It forces me to go back into the house because I spend a lot of time out here. No one ever sees me anymore. So I make my tea inside. I wanted to have a tea maker out here, but Eddie was like, then you're going to have to get a refrigerator. I'm like, yeah, you're right. And then totally off the topic, but I didn't realize how many times I actually go to the bathroom in a day until I got this little house and I had to leave. Lawnmower says Eddie needs more monitors and a nice chair. I try to put him in this. I try to put him in the beanbag chair, and he refused. He absolutely refused. So, well, oh well. Eddie, next question. How do ADU? It says, do you think the government is going to let us build ADUs in and around more metro to make up for lack of developers doing missing and middle housing? That's the thought process. Well, you know as well as I do, the Biden administration had addressed this, which was, I couldn't even believe they used the word ADU. That was amazing. To loosen some of the regulations. So I think more areas are more open to the idea, especially, if it can bring more tax dollars to already existing primary residents that they know that they pay their taxes. I think it could possibly happen. The problem is, in my specific area, is that we have an infrastructure problem that it's so big. I don't know if it'll ever be addressed. And it's been a problem since the dawn of time. You automatically know when you enter Louisiana from Mississippi, because Mississippi's nice smooth roads, and then all of a sudden you get into Louisiana and all your fillings are about to fall out of your teeth. But we will see. I think anything that you have to vote on and you have to get a bunch of people to agree on is always an uphill battle. Always. Justin P says, question, do you think better first-time home buyers incentives will improve post-2008, the recession that paid a big part for many to buy their first home in my area? I love first-time home buyer incentives. The problem is you're incentivizing people that already want to purchase a home, right? And if we do not have a supply of homes and the homes are too already expensive, if you add that incentive that's given by the government, that's all it's going to do is make those homes even more expensive. I mean, the way to do it right now, and as much as it probably kills my soul to say this, is that you would have to incentivize sellers that have houses, let's just say, that are under 1,800 square feet to sell. And you gave them a $10,000 tax credit. That would be great. And then and those people cannot sell to institutional investors. In order to get the tax credit, you would have to get, that would be the only way. You would have to sell to an individual buyer. That would work. But as this happened in Australia, so they were concerned that there was going to be a problem with the housing market when the pandemic started. So they started this, what they call a scheme. That's what they do. And instead of calling it a program, they call them schemes there. So they had a scheme to get in more incentive for first-time home buyers. And so they offered all this money. And sure enough, their home prices even went up even worse than ours did. So yeah, I liked that program for at the time, because there were so many homes that were in bad, hurting. There were so many home sellers that were hurting. They needed to sell their homes right now. We're not in that situation right now. So if that incentive was there, it really wouldn't pan out, because all it would do is raise the price for smaller homes to begin with. So that's my 2 cents. Any next question, please? I love going on rants. Popboy Life says, question, 500 people watching and only 100 likes. Smash that like button. Smash it. Smash it. Let's get a question going. Ooh, my teeth look so white. Wow. Who knew? If you could see them in person, they don't look like this. They just look like that in camera. Jerry Prusa says, has anyone said big thumbs up to the mods yet? Oh yeah, we need to get him a big our mods are always great. They're here all the time, right away. Even Crow Homestead used to be, he's a former mod, but he's still one of my favorites. All right, any next question, or at least a comment that is coming up from my previous video, please? I hope you guys are having a safe holiday, by the way. Serenity Cow. Ooh, I hope you love cows, because I really do. Zillow failed when they bought homes for more than they were worth in a hot market. As prices decline and market cools, will this repeat? Big investors dumping a large number of homes. Okay, Zillow's their whole thing was a nightmare. It wasn't just that they were buying homes for too much money. That was just one aspect of it. They were also hiring a bunch of people to create these deals and everything. So they had this whole bank of people that were just like, yeah, buy that one, buy that one, buy that one. So they were paying those people and they were incentivizing them for as many houses they had attracted. So if I was sitting in my chair, Zillow says, grab as many homes as you can under $1,800. And they're like, okay, how high can we go up? No more than $50,000. So they were like, whatever. And if you get this, we'll give you a $10,000 bonus if you sell at least or acquire at least 10 houses. They're like, on it. So they would be like, okay, we're going to put in a bid for this, bid for this, bid for this. And they would go ahead and start off at $50,000 over. So they'd win it. I mean, and then so they were incentivized to overbid for houses. These like these little negotiators they were incentivized to, like they knew what they were doing. They had too many of them doing it at the same time too. Their whole business model was total trash and they had to get rid of it. And there wasn't that many houses. I mean, they made it seem like it was like tons of houses. I think it boiled down to 7,000 houses. That is not even a thimbleful. That's barely a hangnail full of houses that we need in the United States. So, the only way that would work in our benefit as home buyers is that if a company like Blackstone and Invitation Homes and Tricon Homes, they had financial troubles and they started putting their houses on the market, then that would help you as a home buyer. Stink for a home seller because that means the home values would go down, but Jerry says Eddie runs the show. I thought it was Marcel. Marcel is now inside, and Marcel will be leaving our home, not for any other reason, not because he's not a good cat. It's because it's my daughter's cat. And my daughter is now 19. She's going on 20, and she has acquired her first apartment with a group of friends. So she is taking the cat, which I'm devastated about. I don't even want to talk about it because I'm going to start crying because I'm going to miss that cat. I really like the cat. So we're going to get another cat really soon. Oh my God, I can't believe I'm crying over a cat. I really like that cat, but it's her cat. She's going to be taking him back. Question. Have you looked at Professor Patrick Coden's work on land price inflation due to the upzoning with ordinance and affordability? No, I have not, but hold on. I'm going to screenshot that and I will look at it because I like land and I like talking about land. So I'm going to screenshot this really quick. Yep. All right. Thank you for that. I will look into it. All right, next one, Eduardo. Oh, I'm glad I stopped crying about the cat. I said, Juan Perez says, I just joined in. I want to say they will keep the prices high. The economy will crash. It's impossible to sustain this pattern. The economy, all right. Home prices are, even if the economy was, let's just say the stock market was going to have some volatility, that isn't going to be the thing that necessarily makes home prices crash. I will stand on this hill. I will stand on this hill. What's going to cause a crash in the real estate market is the jobs. If people cannot pay for their homes, then that's going to be a problem. That will make home prices drop. Institutional investors are not going to give up their houses just for the poops and giggles. They have renters in there that are making them money. They're making them capital, and they will continue no matter what the volatility of the stock market is. They're still getting paid. So there's no incentive for them to put those houses on the market at a discounted price. They're not going anywhere. So yeah, the thing that's going to cause the housing prices to drop is if there's a decline in the jobs market. I hope I'm not reading anything mean about me not crying about my cat. I saw something vaguely about a cat in the corner of my eye. No, you have to have Marcel send off live stream with a cake and everything. I'll do that for my my channel members because anybody else watching that would think it was nuts. But I'll introduce you to the new cat.
So one person said, "Look,
you're crying because your daughter is moving out, not the cat." My daughter comes over all the time. That's the whole thing. Like, it isn't like she's not here almost every single weekend. And not only that, she comes by and gets her food. She gets her, she's here. She's here. And we dropped my other daughter off at the Starbucks. They work at Starbucks. And so we see her every day. So it's not like, she basically was only over here to eat food and go out anyway. So only animal owners understand. Yeah. If you look back at my old videos, I had this one, I mean, this is totally off the real estate topic, but I had a dog that was our family dog that had passed away. And I made a whole video about my dog. And with all the pictures of the girls as they were growing up. And then when Static passed away, oh, like I can't even watch it to this day because it was just so, it was a therapeutic thing. But anyways, Eddie, go ahead and put up either a comment or like one of the comments from the past video, because I was saying I was going to address some of those. Okay. Moses says, with investors stock tanking and possibility going further south to save the company, that could bring a lot of inventory on the market, and layoffs are continuing. They may have to fire their homes. They may have to sell their homes while employees are having to sell their homes because they can no longer find a job if we head into a recession. That's pretty much what I was saying. Like, if the job market goes to poop, then we'll see a lot more houses hit the market. But with that being said, let's just say the job market goes to poop next week. Like, everybody and their brother gets laid off tomorrow, right? Those houses to hit the market takes months. For the foreclosure process is not the lickety split thing, right? So they have to get behind payments X amount of times. We'll just say for the sake of it, 3 months. So 3 months, then the foreclosure process starts, and there's court dates set, and there's paperwork that needs to be done, and there's title work that needs to be done. Typical amount of time from the time it's foreclosed on to the time that it actually hits the market once again is on average about 9 to 18 months. Sometimes it can be up to 4 to 10 years, because if those people are in bankruptcy, it takes even longer. And then if they're in bankruptcy and they're getting divorced, it takes even longer. There was a house around the corner from here. It was 6 years. 6 years it sat there vacant before the foreclosure process finally was done, and they were able to cure the title work enough for someone to purchase it. You know, the foreclosure process isn't like lickety split thing. It takes time. It takes time. Eddie, next thing. Eddie's like looking at other stuff. All right. Censored every day says, I don't care what these associations say. The price increases are not sustainable. At some point, prices will come down because wages can't support them. I'm going to sit tight on the sidelines. Why buy at these prices with a downward price risk? Renting is the way to go, unless you can buy some cheap land in a rural area for those who can work remotely. Rent has gone up exponentially. And if you're in a financial situation where you can't purchase right now and you're totally fine with your rent, that's what you should be doing. Nobody should be house poor. And especially if you have to factor in that inflation has happened. Like, there's no doubt about it. We are definitely in like the inflationary period right now is overwhelming. Just go out and try to buy milk. So if you can't buy right now, then don't. I'm not like, renting is the way to go for you, but it's not the way to go for everybody. If somebody has a significant amount of money to put down on a house and these interest rates aren't affecting their payment that they want to pay, then it's not the right time for them to sit out and wait 2 years, because home prices are still going up and so are interest rates. And even if the prices were to come down a little bit and interest rates continued to go up, you're still going to be paying a heck of a lot more to the bank than you would to the home seller. So, I mean, it's just how you want to weigh it out. If you can wait, sit tight in 5 years, and hope that you're right, then do that if that's what you feel good about. I'm not telling you not to. I'm not the end all be all of information when it comes to real estate. There's lots of people that like to, that have their own impact and statements when it comes to real estate. Don't just listen to me. I hope and encourage that you don't, but I want you to look at like the people that are really, really smart when it comes to this. Like, Go and look at the National Association of Realtors when it comes to the numbers of homes that are being sold, how many homes are in foreclosure. Look at Moody Analytics when it comes to foreclosure rates. Look at the National Association of Home Builders and what they're saying and what they plan on doing to help with the building supplies. That comes from the horse's mouth, not from me. So that's where you make that decision for yourself. Did that sound preachy? I hope that didn't sound mean. I didn't mean it. Sometimes I get heated. I get a little passionate. Huh?
I think the difference is you don't have anything to sell. You're not selling anything. So make
Right.
sure you watch those.
Right. I'm not selling anything. Alec said, you got to love people sitting on the sidelines thinking they're a huge inventory of cheap homes in 2 years. Not going to happen. And $3 of gas will never return. There's absolutely no incentive for someone that has a 3% interest rate to sell and buy again at 6%. If valuations decline, I suspect I suspect most will just stay in their home for a few more years. Heck, even if I lost my job, I'd rent my house out and live somewhere else while my renter continues to build up my equity. Well, that's actually pretty smart, Alec. If you couldn't pay your mortgage and someone else can, yeah. And that was something that Trevor Smith was saying in his last video, which was house hacking. So basically you have a house that you have this mortgage on, and if you're struggling, you could rent out a room. Be very cautious when you do this, and make sure you set up a lease agreement that covers you as a homeowner and as a person that's renting it, so you're not in a bad situation. Have an attorney look over for you, like, trust me, because some people are very smart when it comes to rental agreements, and they use it to take advantage of the person that they're renting from. So make sure that's constructed in a way that it protects you as a landlord, just FYI. But yeah, thanks, Alec. That was smart. Some experts say housing market will mud to 35% or to 45% deeper fall. What do you think? I think that even if that was to happen, it's not going to happen today. And I want to know how they think that it's going to go down 35 to 45%. Even some areas they were talking about in California, they're like, there's massive price reductions in California. Well, they're still selling. And when you close out the month, they're still selling for above, like, they're still going up. The average home price is still going up, even in California. So you got to, everything in real estate is area specific. So anything I'm saying is on a nationwide scale right now. If you're worried or concerned about your specific area, let me try that again. If you're worried about your specific area, consult a real estate professional in that area, and don't just talk to one, talk to several. So that way you can understand what's going on in that specific area. You don't, just don't listen to one person, listen to several sources. You got another question you want to throw up on the screen there, Eduardo? Eddie. Isn't the monthly payment that determines what a house a buyer? Let me try this. Isn't monthly payment that determines what a house a buyer can purchase? Yes. So, especially with first-time home buyers, they're very payment oriented. Second-time home buyers, not so much. First-time home buyers, definitely. So if the interest rates go up and the home prices continue to go up, then they're pretty much priced out of the market. Or they have to find a home that's less expensive. It's just been very difficult for them. Most of the time, that whenever interest rates go up, you see a huge decline of people that are actually searching for a home. But since we have such a lack of inventory of houses on the market in most real estate markets, not all, you haven't seen those big deductions like people were hoping for. And I'm waiting. As soon as I see that we're seeing huge price reductions in some of these cities, I will be the first one to tell you. But I refuse to make a sensational video that isn't reflective of the truth of what's actually going on in a housing market. I like the comments in my last video were saying that I'm lying, like, oh, she just wants to sell a house. And it doesn't matter to me if you buy a house in Colorado, California, Massachusetts. Most likely, most of you are not going to be buying or selling a house with me. So what would be the purpose of me making up these numbers and lying to you. There isn't. I have no incentive to lie. It is what it is. And I refuse to make those kinds of videos. If I was to do that, my numbers for videos would be overwhelmingly over the top huge. And they're not, because I refuse to not make videos. I refuse to make videos that are not being truthful and honest to my audience, because then you're just going to make yourself look like a fool in a year when you're like, oh, I thought there was supposed to be a housing crash. Well, and there wasn't. I know. Like people say, you're too optimistic. I'm not optimistic. I think affordability is probably one of the biggest crises when it comes to the housing market right now. And it's terrible. It's awful. And things need to be done. I think there's a problem with institutional investors, and we have a huge problem with that. And some people like to downplay it. That's what I'm concerned with. I just don't see what would cause a housing crash at this point, not 30 to 40%. Question, Killian one says, would it be better to rent a room on your own or do an Airbnb? Would it be better to rent a room on your own or do an Airbnb? It would have to do with your plans. Now, are you planning on buying a house and then renting a room out of it? Or do you plan on buying a house and turning it into an Airbnb? It would all depend on your financial situation. If you had I would have to understand what you were wanting to do for me to like make a spreadsheet on how that would work. But I will say the reputation of Airbnbs lately has been garbage. Look up the articles on that. People are not as happy with Airbnbs as they used to be. So some of those Airbnb landlords are, what do they call them? They're not landlords. What do they call Airbnb owners? I forget what they call them, but yeah. Eddie, you can pull up something else. La, 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 la. But that was a good question. Yeah, if I had a house, I would do an Airbnb rental out of my own house if I was living there. But if I had a vacant house, I would consider it if I lived in an area that was like a vacation spot. Clifton Charles says, job market will decline after 2024. Remember, there are a lot of automation. There's a lot of automation coming up in the next couple of years. Prices will correct, but I don't see a crash after 2025, until after 2025. Well, that's interesting, Clifton. And there is a lot like that was that's been a topic of discussion for like the last 5 years. Andrew Wang, do you remember? He ran for, did he run for president? Yeah, he did. He was trying to run for president of the Democrats, right? He was one of those people that was talking about how automation was going to cause a big problem. And he had this universal paycheck that he was trying to give everybody. It was like an additional $500 everybody gets every month, something like that. I don't know. This was a while ago, but he was talking about the reason he wanted to do that is because there's going to be so many people's job that's turned to automation. And I don't know if you've even seen it, but like places like those Bennigan's and IHOPs and stuff like that, they have these little robots that come in and they will seat you at your table, or they'll bring your food to you. I was in Las Vegas and I saw this and I thought that is kind of creepy. It reminded me of that movie WALL-E. Very creepy. But you're right. That could cause it. And again, that would be because of the jobs market. The jobs market will cause the problem. Eddie's finding another question to put up on the screen. Eddie has something he wants to say. Eddie's over there. He won't let me turn the camera over there, but he's right there. No. Well, hurry up. People are waiting. They don't want to sit here and look at my face. Cedric Webster said, if I own our 98, his 1998 mobile home outright, which we've remodeled and upgraded, but we are wanting to move to areas and buy land with modular home, should we sell it, trade it in, or keep it and rent it out? Cedric, if it was me, and I don't know your financial situation, but if it was me, I would rent that sucker out in a heartbeat. If you can financially do it, and it also depends how far away you're from your from like moving from that specific area. If it's in the same like town that you'll be living in, where you can drive by and check on it and everything and make sure people aren't tearing up the place. Little secret, if you put in the lease agreement that you need to change out the air filter every month, so that way you can kind of get a like visual of what's going on in your house. Yeah, I would personally rent it out, but I don't know your financial situation, but that's what I would do. It's always good to have some rental properties on the books. It's great.
So here's something I want to address.
No one can hear you.
I know. Go ahead.
Okay. Inventory from April to June went up 150% in most markets. Where are you getting that number from? 150%? Didn't go up to 150% in my market. Didn't go up 150% in, let's see. Hold on. I can't see this because I got this thing. Hold on. How much inventory levels have shifted over the past 6 months? Where is the highest one, Eddie? Like 100. There's nobody that's at 150%. Flagstaff is at 48%. Reno's at 50%. We got Bend, Oregon at 48%. We got Spokane, Washington at 44%. Then you're saying in most markets. I mean, I'm seeing a few highlighted blue, but I'm not seeing most markets, and it looks like it's mostly on the West Coast. Oh, wait. There's one right here. New Hampshire. That went up 46%. And I know there's some areas in New Jersey and Maine. I'm not saying that everybody's, still flying high on the housing market right now. Like sellers are still rolling in like Scrooge McDuck and all the equity that they're going to be now building up because they've gotten like tons of bids. I'm not saying that's what the housing market's doing right now, but it's not crashing either. Like this illusion and that some of these people have been perpetuating is that the housing market is crashing. Next week, it's all on fire. We're all in a fiery pit of blah. That's not reality either. Huh? What? Are we locked?
Oh, there we are.
Oh, Eddie's locked. You're not locked.
No, you were locked.
I was locked.
Yeah.
I wonder if anybody could hear me. Anyways, I got excited. They maybe they thought I was going to say something bad. That's why they locked me up. Well, anyways, we have crabs to get, Eddie. We're having crabs at my grandma's house, and I'm going to be cooking them live. Eddie says, "Don't do that. Don't say it." And I'm going to get going here, Eddie. We're wrapping this up. So. Everybody, I hope you have a fantastic 4th of July. I hope you are safe with no drinking and driving, friends. Friends don't let friends drive drunk. Just know that. And also make sure that you hit the like button on the way out. And if you have any comments that you'd like to say, can we be friendly in the comment section after this is published? There's no reason to be hateful. There's no reason to insult people's appearance. We're grown-ups here. Let's be nice to one another. It's kind of depressing when you read this, when grown-up adults start insulting each other's appearance. It kind of negates all of your arguments right there. Stop doing that. So happy 4th of July, everybody. So long. Oh, thank you. And thank you, my moderators. I said thank you throughout the stream, my friend. Eddie's like, he's being a dad right now. Oh, see, this is the reason why that lady said I'm mean to my husband. That's the reason why he said that. All right, everybody. Love you guys. Mean it. Mwah, 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 mwah. Be good. Stay out of trouble. Don't talk to strangers. Look both ways before crossing. Make sure you do not light a bottle rocket in a bottle and then hold the bottle. Burn your hand. And don't step on a sparkler after it goes out, because my kid did that. 3rd-degree burns. It's terrible. Did we end this, Eddie? Did you hit the end button? Hit the end button. Holy cow. I don't want to do it no more. Like, everybody doesn't want to see me dance. Oh, somebody liked my hair, though. They did like my hair. Thank you, beautiful trash. I appreciate you.